Tomorrow is CPI, and the markets are going crazy, and the news is not even out yet. Let's set up a game plan and talk trading setups for CPI tomorrow, which should be a very volatile day. Let's jump in. Okay, so let's take a quick look at what we're expecting. Tomorrow we're seeing a forecast of 3.1% year over year inflation. We see month over month at 0, and core CPI month over month is expected to be 0.3. Now, what does this mean for the US dollar, for gold, for indices, if these numbers do in fact come out as expected? If they come out, for example, 3.1% headline inflation. And what about core inflation? Well, let me just give you the quick rundown, my game plan on these things as we jump into tomorrow's price action. So I want to start with the dollar index, and we'll take a look here, and I want to point something out about this. If tomorrow we get CPI as expected or lower, I think you have a nice little dollar drop. And let me point this out. So let's say we have a CPI report that is hot, as expected, or less than expected, cooler than expected. Now, if we take a look at USD, and we're also going to say GLD, gold / SPY, okay? So I'm gonna do this little game plan chart here for us today. So CPI, if it does come out, in fact, hotter than expected, then it's pretty clear the dollar will rise. Like, what, Nick? Inflation hot, meaning more inflation, that's good for the dollar? Yes, because what that will mean is that the Fed is less likely to rate cut and more likely to keep interest rates higher for longer. Now, of course, that slows down the economy. It creates a demand for cash, for US dollar, and it makes borrowing more expensive. All of those things make the dollar stronger. At the same time, it would probably weaken dollar denominated things like gold, and the S&P 500 would probably see less optimism in terms of stock earnings, keeping both of these kind of in the bearish camp. What about if the CPI report tomorrow comes out as expected? Well, then in that case, I would say we actually probably see dollar bearishness and equities and gold rise. Why? If it's just as expected at 3.1%? Well, because if that happens, that means inflation is continuing in the right direction as markets have already been forecasting. If you notice the dollar's down, that's because things have been improving in the inflationary department. So I think if we get as expected, we see those things trend lower. And finally, if we get cooler than expected inflation, it's pretty obvious in my opinion that we would see most likely dollar drop and stock market and gold jump. Okay, so now what this leaves us with is in most scenarios, I'm remaining where my current stance is. Bearish dollar, bullish gold and S&P. Okay, so that's my game plan. That's my breakdown. If that was helpful to you, then let me know by hitting that thumbs up button on the video. I do look at the number of likes on my videos to see what people generally like in my videos so I can keep improving them. So please let me know by hitting the thumbs up button. Now, I also want to take a look when we talk dollar, right? I think we're sitting at resistance, but tomorrow will be the telltale as whether or not this level holds or breaks out. I want to point out that in the case that we do get hot inflation numbers tomorrow, I think it's likely that the dollar would go retest 105. That level still bearish overall, I think could be kind of a backup sell zone in my personal opinion. However, if we get cooling numbers as expected or even better than expected, meaning really cooling numbers, the dollar probably drops from this 104.2 zone that we're currently trading at. So path of least resistance to me clearly is to the downside, but if we get a surprise, I think we see a move up to 105. That's my game plan for the dollar index. I hope that that is helpful to you. Now let's also take a look at what institutional money is positioned in prior to CPI. Now, of course, this is the non-commercials commitment of traders data that we've pulled into the Edge Finder, which is our market scanning software here at A1 Trading. We build tools for traders, and if you'd like more details about how you can get access to this, there will be a link down below in the description. If you send us a direct message, we'll get you a special discount ahead of CPI so that you can get this data for yourself and have a copy on your computer. And just a heads up, this tool is very easy to use. It is also there's no installation. We literally just give you access link, and then you can basically jump in here and use it on your own time. So if you would like access to the Edge Finder, there will be a link at the top of the description where you can chat with someone on our team. Okay, so in terms of positioning, let's take a look. overall net positioning is still very bullish: gold, USD, Nikkei, Euro, silver. And then on the bearish side, you have CHF, JPY, CAD, Australian dollar, Kiwi. Okay, so that's the overall net positioning. So that's all we need to look at, right? No, there is more value in this report on the bottom half. And I'll point this out here because the latest money flow is a much more shorter term signal in my view than these net positionings, which change very slowly. So this is like a super long term signal, and this is more of a trader's signal chart in my view and the way I read it. If you take a look at the US 30, this is the Dow Jones, it had a massive increase. Institutional money went very long the Dow, and I find that to be incredibly intriguing. Same thing with the pound. Both of these are risk on assets heavily. Same thing with Aussie, Kiwi, and US dollar, but kind of a surprising outlier there is the dollar index, seeing a little bit of boost. But overall, I think that if you look at this thing from a kind of net basis, it seems to be a very risk on week in terms of institutional money flow on the COT data. So as we go into CPI, I think that, again, if you only looked at this, you would say, oh, all of these things are bearish, right? Well, look, the big inflows of money into the Australian dollar, the Kiwi, and the pound could be interesting to the currency traders who are watching this video. And if you're an index trader, commodities trader like myself, then definitely interesting to see that US 30 got a nice little bid there. Gold also did. For those of you who are the gold bugs in the room, SPX, silver, these things are all seeing bullish inflows this past week. Meanwhile, the JPY, Bitcoin, ZAR, the South African Rand, oil, platinum, Swiss franc, these things generally seeing a decline in interest or bearish flow in terms of money. Again, if you would like a copy of this software, you can get access to it by clicking the very first link in the description and messaging us about pricing options and what we have available for people who are interested in getting a copy of our tool. Now, in terms of signals, US 30 is definitely up there, and I'm going to watch this one closely here this week for possible pullback plays. It's made a big run overall, and I am interested in US 30, but I've got to see a pullback before I can really get involved. So we take a look at US 30. Yeah, this thing has made a massive push. However, if you take a look at the hourly chart, I would be interested to see if we can get a solid breakout. We're trying here, but to be completely honest, I'd rather probably wait for CPI to come out just to see what the numbers do in fact entail. As I mentioned, if you get cooling numbers, it is likely to cause equities and gold to make a push higher. And speaking of gold, guys, take a look at the daily chart with me. It seems like bulls have completely lost control here. We'll actually go full screen here for a second. I'll show you this. So gold has been in this really nice upward trend recently, but last week was such a crazy week. We saw a price gap all the way up, trade all the way up to 2150 approximately, very close, and now it's all the way back under the 2000 mark in 1 week of trading. I mean, that is crazy volatility, and with us closing potentially underneath this support today, I think it sets a really bearish tone for this week. However, again, we are waiting for the CPI number to come out. If numbers cool, it is likely that the gold market may see a little bit of strength off of a weakening US dollar. However, I would say if you are a bear on gold and we see hot inflationary numbers, it's very possible that this thing is set to trend lower for a while and possibly even go back to retest this support level that's lining up right around 1933. So we'll watch that one close in terms of gold. But again, for me, I'm going to pause any sort of bullishness that I may have had because, again, breaking underneath that 2000 level was really my line in the sand for the time being. And until we see a meaningful breakout and higher lows, this is kind of an untradeable market for me right now. So I'm going to stay out of the way when it comes to the gold market. In terms of setups on the other side, however, bearish setups, US oil actually is really interesting to me right now as price potentially pulls back. What I want to point out is that if this week we do in fact get a bit of a spike up on oil, I may actually be entering into a possible short setup. I do like the 38.2 and the 50% retracements on US oil, so I'll be watching this one. Why, Nick? Well, economies around the world seem to be slowing. China, Asia has had a slow recovery compared to what expectations were. And so a pop on oil, again, major demand is not quite there right now, and expectations for that demand are for that to go lower. And so I think that creates a nice downward trend that can sustain itself when it comes to oil. So I'll be watching for possible sell setups on oil. So just to reiterate, I'm bearish on the dollar, bearish on oil. I'm neutral on gold, and I'm still bullish on S&P 500. Speaking of which, I still do have my position open on this one, and stops are trailed. So this signal was sent inside of our Discord channel. If you're not already inside of the Discord, I should also make mention to this. This is a great week to join us. We trade very heavily during news weeks, and so we will be very, very active in here. If you'd like to get notifications for whenever we take a trade, the information to get joined up within our Discord will be linked at the very top of the description. And again, you can message us for pricing details. We do have a monthly, a yearly, or unlimited access memberships. So if you'd like some information about that, just shoot us a message and someone from our team will help you out with that. With that said, guys, thank you very much for watching. If this was helpful to you as we prepare for CPI, then make sure to hit that thumbs up button on your way out. Thanks for watching. If you're looking to improve as a trader, we've got some cool free resources here that I wanted to share as we close today's video. Down below in the description, there is a link to join our Discord channel or our Telegram channel. And we also have our website, a1trading.com, where traders can get access to free course material to help you improve as a trader. Remember, we are also live Monday through Friday on this channel around 9:30 a.m. US Eastern, broadcasting most live news events and that sort of thing. So hope to see you there. And also, we do have a couple videos here showing up on the screen. If either of these seems like it might be helpful to you, then make sure to click here or here, and we'll see you there.